got the recording set up. That's why I got offline there. Okay, so what is important, or what um, should we maybe consider as we look at the market? Again, we're seeing, the market has, gone nicely up, 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 leveled off, then went up, and then it came down, and now we're seeing this movement, a little pullback, and then up again, and now it's coming down. Now, the thing that is driving this market is what's driving this market? Well, they've infused tons and tons of money. Okay, GDP in the United States somewhere it's over 20 trillion. I think it's around 22 trillion, 21 trillion. They've put into the market somewhere between and if leveraged even could go higher to $10 trillion, half of the GDP. And we can imagine that there's going to be more money being pushed in. So money flow into the market is what makes the market go up. And someone's got to be willing to pay more than the last guy for a stock. When we see a stock day, when we see days, just to reiterate, when we see days where we have a green candle, an up candle, that means money came in. Okay, so there was an increase of money. When we see a down day, it doesn't matter what the stock price is, it means that money left. So money left the market, okay? So it left the market. It was out of the market, okay? That's what makes the market go up and down. So for the market to actually go down, money has to leave the market, okay? For the market to go up, new money has to come in. New money because someone has to be willing to pay more than the last guy who's selling. So this is why money flow is so important when you're talking about the market, right? When you're talking about assets going up and down. This applies to anything, business, real estate. It doesn't really matter. At the end of the day, values go up when people are willing to pay more for uh, for the asset than the person who had it before. So when we see today, as an example, okay, so today when we look at the market, we have a down day. It's green because where. So if we go like this, we'll make it a little bit bigger. It's green, but it's green because of where it started, not because it was a good day. Obviously, it ended way up here the previous day on Tuesday, and it opened right here and closed right here. Now this is a doji, which typically means reversal. Okay, we usually see at the top of a trend, but we saw a doji here, and we saw a down day, but it popped up. We see another doji. This just means indecision, right? Indecision about which way the market's going to go. That's why tomorrow's so important. Is this the beginning of us coming down, or at least to say, this point right down here where we should get some support. So around looks like 26, 2700. Let me see what that is. The high was 26, 26, 24. Is right around this. This is 26, 28. In this range, it's at 27.5. So, seeing it come down maybe into this area and then starting to go up again. We'll have to see. But for the market to post this day, money had to leave the market. For the market to post this day, new money had to come into the market. Okay, so when we see days where money's leaving and there's a ton of money in there, um, it gives us pause that how or what's the next trend going to be established. Is this going to be coming continually down, or was just this profit taking and shifting money around? Now we know that uh, the price is after the closing. That price you see there, is that what you're talking about, Rodrigo? Yeah, so the market, technically the market's going to run till 8 p.m. You're still going to see prints 8 p.m. on the market. Okay, that's post close. It'll run till 8 p.m. Then it'll reset, and then it'll be the other markets will be, around the world are opening. The S&P still gets traded. So for us, this is where it is. But the market itself is, last checked, I checked just before I got on the call, the market seems to be coming down to test down here, this bottom. So it'll be difficult to say exactly what's going to happen. If tomorrow the market goes down, it'll be very important to see what happens Friday, because we might see if tomorrow's down, then Friday could be another down day too because of the weekend. A lot of people take the money out. Speculators and traders take the money out on the weekend. They don't want to be in there in the weekend. But it would be challenging to see the market continue to go down. With all this money that's sloshing around in the market. So, I'd imagine that the market's going to continue to go up and continue to challenge the trend, which, of the economy, which is the trend is really, really bad. There's not a lot of good news out there. And it looks like the United States, which is the economy that's most concerning to us, looks like the United States is going to try to reopen the economy slowly, but try to reopen the economy. So that'll be interesting to see if it flares up again and what kind of damage that could create if it goes wrong, and what the market's going to do. I think that this area here, seeing this come down and then pop up is not a big deal, but to see it continue to rise, this would be the amount of money thrown into the market by the governments and the Fed and the Treasury. This would be bullish, very bullish, a bullish market even, where we thought clearly we're in a bear market because of this retracement. So it's far beyond a 10% correction. This is a drop of, we're talking like a 30% drop, and then it pop up and recover, half of it, more than half at this point, but half of the run of what it fell. So on a longer term trend, this doesn't seem so bad. It's just pull back up and then continue to go up. So it's not crazy to believe the stock market could continue to go up, even though the economy is not really moving, and there's going to be a lot of companies that are not producing any sort of returns. So and you see the companies that are going up, and some of these companies just they know they're not going to make any money. They know there's not going to be any money for the next couple of quarters. It's still going up, and that's really caused by the additional capital that's being thrown in the market. There's so much money being thrown at the market and the economy. This is why the market still goes up, and even though the market itself, the economy, is not doing very, very well at all. So at the end of the day, for us, for traders, what does this mean? It means I want you to recognize just an example of money in and money out, what's happened over the last couple months. The big thing, I'd like you to consider is do not get too attached to any stock, or any particular company. I think that you want to first establish, is it a bull market or bear market? And if it's bullish, then let's look for things to buy, and when it's bearish, let's look for things to sell, or in reference to options and stuff, look for things that we're going to take advantage of, the options and the ability to use options in reference to them. So right now, at least this trend obviously is very bullish. The amount of money that's going in is very bullish. We'll have to see what happens tomorrow and Friday. So tomorrow is a really, really important day, I think, for the market to see if it really can continue to rise. Based on the bad news that will probably continue to come in, especially tomorrow. So and Friday, then that'll make Friday that much more important. Now, if we see an update tomorrow, I'd still feel very bullish about the market where it sits. If it goes down, it'd be interesting to see, if Friday, if it can come back or it continues to go down. If tomorrow goes down, I would probability would tell me that Friday is going to be a down day too. Just because if the Thursday's it has been established at least the last 3 weeks in the trend, as a buy day in the face of horrible numbers with the unemployment. So we'll see what happens. Again, for us as traders and investors, if you're investing for the long term, there's lots you can jump into and wait it out. If you want to wait out the next 2-3 years, clearly the stock market should be up, considerably from there as we move on. But in the short term, if you're a speculator, if you're a trader, you're in and out. These trends do matter because you're looking for quick returns. You're looking for an in and out. The shorter the better, right? That you can capture the money. So those overall trends matter to us, in this time period. So again, obviously the pullback, this huge pullback, puts us in a bearish market. But seeing this and the amount of money, I feel very, bullish on the market because it really doesn't care what's happening. In fact, continually seeing bad news pushing the market up. When they report bad news, the market seems to go up. Tells me that the mindset is very bullish. Obviously, of the investors that are participating in the market. So we'll have to see what happens tomorrow, and see where it goes throughout the rest of this week and next week. Does anybody have any questions or while I'm looking at a chart, any companies they want to look at or want to examine while I have this chart up? Anybody want a company they want to look at? No, nobody. Oh, okay. Marvel. Okay, so just Salesforce. Okay, so let's look at. Okay, so Marvel. I don't. Amazon hit a new high today. It did. So I don't. Do you mean Marvel the comic? Okay. So let's look at that. Okay, so Marvel Technology is what you're talking about, right? All right, so let's look at okay. So this is the downturn of the market. See, it's on a bullish run. It's pretty much following the S&P. Looks like. Um, yeah, it's pretty much following the S&P 500. Um, again, it's bearish down here, but obviously seeing this rise, very bullish. Today it was down. Looks like it was down with this red candle here. Came down. This company, I don't know what they do. What do they do? What's this company do? Is this Marvel? This is Marvel, the comics, yes? No? What's this? Marvel? What's Marvel Technology? What do they do? Chips and circuits. Oh, okay. Well, that's, chips and circuits, I think, are faring well in the market. This one seems a little bit choppy. What I mean is, there's gaps. Like this is a gap. This is much of a gap, but this is a gap. This is a gap, so it be very jumpy. Looks like the low here was 1645, and it looks like it's coming to test this high. We'll see what happens, but it seems very much looks like the market to me. You know, it follows the market. You know, market goes up, it's going to go up too. So, um, you know, chip makers seem to be doing relatively well. I think people are looking for places that they think are going to prosper and also survive past this uh, pandemic. What do you think of the market? Stocks are increasing. What is causing it to increase? So Diane, I think I don't know if you joined us a little bit late, but what's causing the increase is simply money flow. So this is why it's important to stay dispassionate about your stocks. Okay, about stocks. It has very little to do with, in my view at least, fundamentals. You know, there's no fundamentals behind Tesla being traded where it's being traded. But as far as I'm concerned, Amazon's way overvalued too, right? If I was looking at I was looking at not the economy itself, but I was looking at what's this company going to pay me to own it, and you're looking at, you know, a lot of these companies that are still rising, um, their PE ratio, their, you know, price to earnings, how much they're going to pay you is getting worse and worse. So, you know, some of these companies are going to pay you nothing, like a Tesla or an Uber or Lyft. Some are going to pay you maybe 1%, 2%. Um, there's a point where, you know, you have to ask yourself, am I really investing or am I speculating? Because to say that you're making 1% on a stock is is worth the risk. In my view, it's not. So these stocks going up, Diana, they're really little to do with fundamentals of the company. Very little to do. It has to do with there's tons of money in the market now because of the Federal Reserve and the government, um, and the Treasury in the United States. They're throwing all that money into the market. That's causing it to go up. So it's not a hard decision when you can borrow money at 0 or a half a percent or 1% and throw it in the market. Um, at this time, it's not a big, you know, big risk in the sense of, you know, what do I got to lose? I mean, the money they're giving the money for free. Putting it in the market is probably the only place that you have a legitimate chance of making money, because you can't put it into business and stock, um, you know, sorry, as business and real estate, because those markets are seized. So, you know, you just have the overall market as an opportunity to make money. So again, to everybody, the market goes up when there's new money that comes in. It goes down when money leaves. Clearly, there's money coming into the market. That's the only way it could go up, and it's certainly a lot of money because it's charging up. So tons of money, you know, being re-injected into the market, and there's still more to come. So that's why it's not shocking to see the market go up or continue to go up. You know, I think I shared, you know, and just to go back to this, Jess, like this looks like it follows the S&P 500. The overall market is what's following. Um, I would not be shocked at all to see this stock go up. Now you can see it's coming into some resistance here, but when it blows past this area here, you know, you can see, look at all the resistance in this area. So this is resisting all these points here, resistance. So there's a lot of points of resistance. If it breaks past here, there's, you know, no reason it can't go up to 28, 28.50, you know, where it was previously. So you can see that this is almost back to where it was, which is phenomenal, you know, considering the environment that we're in. Under Armour as a long term, you know, I'm not a fan of any company unless they pay you a really good return. So I don't know what Under Armour pays, you know, what their yield is. Um, but you know, a lot of these companies don't pay very much to take the risk. So you know, I think any company that you think is going to survive this is a long-term play. I mean, they're very low risks to put the money in, because you know, if you believe that they're going to survive, then clearly they're, over the long term, you know, history tells us they're going to go up. It's more of, if you're trading in and out, it's a much more difficult, you know, decision whether to put the money into a company like that. And you don't want to be a trader who gets into a stock and really don't want to be long term and now is long term because it went the wrong way on. So very, very interesting to see what's going to be happening next. If you decided that Under Armour is something that you believe is going to be on the other end of this and do well, continue to grow as a company, um, I could understand why you want to maybe buy it and hold it long term. I would just say, ask yourself, what return are you going to get? What opportunity you lost because your money's there, you can't get into something else. That's all. Salesforce, what's their symbol again? Is it, what's Salesforce's symbol? I've actually traded them before. Who wanted Salesforce? CRM. Okay, yeah, that's right. Customer relations. Excuse me. Developed the hiccups. Isn't that awesome? Okay, so same as the market, came down, went up, came down, going up. Now I like this a lot. The fact that this doesn't seem to have any problem following the market. Now this was, actually that's not. I thought that was above this. It's not. My apologies. I like to see a stock if a market's down. The days that the market's down, I look for stocks that are going up, resisting the market. Excuse me. The same thing applies when the market goes up. So when the market goes up, I look for companies that go down. So I'm looking for short positions or down positions when the market's up, and long positions when the market goes down. The reason is because it's very difficult to know what's happening in the way of real sentiment to a stock. If it's just following the market up and down, it doesn't tell us much. But if the market's going up and a stock's going down, bucking the overall trend of the market, that tells me a lot about what the people that do invest in that company have decided to make a move. So they might be in a stock that's going up, markets that's going up, but the stock's going down. There has to be some heavy selling to resist the urge to go up with the market. Same applies the other way. Stock market goes down, a stock goes up. So a good example of that recently, like last few days, on Monday, the market was down. That's this day right here. Market was down, and a company like Walmart was going up. Even though the market was going down, Walmart was going up. Even though the market was going down on Monday, EA Sports, EA Electronics was going up. What else? What else was going up? Roku was going up. So these companies that are going up in a downward market show amazing strength, a lot of money being pushed into it, enough to resist the overall market trying to push it down. Now, when the market was going up yesterday, it was going up. I was looking for stocks that were going down. What was going down when the market was going up? To me, that's the most interesting opportunities. So I'm looking for down positions when the market's up, and up long positions when the market's going down. Does that make sense to everybody? It's too hard to see what's really going on with a stock that's just following the market. Very difficult to see what they really believe about it. So I'm looking for the opposite. I'm looking for things that go counter to the market, to tell me what people really believe. The investors that are really in there or going to be in there think about the stock. Too hard to see when everything's green, market's green. I mean, what does that tell you? To me, it doesn't say much. So again, I'm looking for things that are going in reverse of the market. So we'll have to see, what happens with the next couple of days. I think it's going to be very important to see what happens. For us, again, I'm just concerned. My only concern, number one concern is it a bull market or a bear market? And obviously, if you look at a longer term, one could argue that it's a bull market. Someone could say it's a bear market. It's really, the question becomes, is there money coming into the market or going out? And to me, there's a lot of evidence that there's money re-entering the market. Money that didn't exist, 3-4 months ago. This is money from the government. So it's hard for me to imagine the market's not going to continue to go up. In fact, I believe that, I think I shared this last week, and this is just my opinion. I think that it's very likely, if you look at this chart, this is where it was, and then it dropped down, and then it's going up again. But it wouldn't shock me to see this go all the way up to here, where it was, and us have a 10% unemployment rate, or even higher, in the economy. So you don't need a strong economy, current economy, to make the market go up. All you need is money. That's all you need. You need new money coming into the market. So there was, this going down was actually money leaving the market, not re-entering. So if a stock, if the market opens and it goes up and it goes down, and it's exactly where it was the day before, that just tells you that money's been moved from one place to the next, but it hasn't left the market, right? So they sold Amazon, and they used the money to buy Microsoft. That overall market is still going to be the same place, because the money's gone from one place to another. It's when the money leaves the market that's what makes the market go down. That's why, looking at the yesterday and today, the market basically gave back what it took. So it's very interesting to see what the market's gonna do in the next couple days. Any other questions? We're at the end. Actually, we didn't get into the options training stuff, but we'll pick that up. There's so much going on. It's very, very difficult to not take notice of some of the stuff that's going on. So this is why I think it's important for the more specific you can be about what you're looking at and what we can do to maybe trade it. I think is really the way you want to go. And trying to figure out where the opportunities are. I'm looking at the market right now, and it's retesting the lows again. It's retesting the lows of the day, and if it rips through it, which it totally might, excuse me, sorry about this. I can't get rid of these hiccups. We'll have to see what happens. Any questions before we wrap up? So the lesson I want you to learn today is, first and foremost, do I think the market's bullish or bearish? That's the number one thing. And then, if it's bullish, I'm going to look for opportunities that are going to go up when the market's having a down day. And if I'm bearish, I'm looking for opportunities to go down when the market's up. That being said, we still want to balance. It'd be nice to have a little bit of short and a little bit of long at all times, just to take, because you never know what the next day is going to be like. Cool. Any questions? Gosh, I got a question. How do you get rid of hiccups? Oh my gosh. All right, if you're good, type in yes or Y. Good stuff. We're still running our Monday call, so I'll see you all Monday. Bring questions, bring stocks you want to look at. We'll talk some more, and hopefully we get some time in actually to go through the options, training again. Excuse me. Gosh. I'll see most of you, I'm sure, at 9 o'clock. At 30 minutes, it'll be the same room, and we'll talk some more about the real estate and what we see happening in the real estate market. All right, everybody, have a great little